What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 30th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to talk about a critical price range that Bitcoin is coming up against to see whether or not it can stop treating it as resistance, break through, and establish higher prices, chartering all the way up to that $60,000 range, and eventually setting in new all-time highs. And I want to take a look back at history to see if we can learn any lessons about what we need to see in Bitcoin's price in order to formulate the setup to break out even higher and really have that sustained rally. We've got lots of things to dive into today's video right after our quick sponsor. And our sponsor for today's episode is Opera. Opera has a major announcement to share with you all here today. And for those of you who may not know, Opera is a leading web browser that's shown continuous commitment to Web3 since as far back as 2018. They first started with being the first major browser with built-in crypto wallet functionality, but have now released the beta to their new crypto browser made for Web3 that I have downloaded on my computer. Current wallets are often browser extensions, bolted onto Web2 browsers. This has proven hugely insecure for users over the past few years. But with Opera's combined crypto wallet and Web3 browser, your journey through Web3 is safer and more user-friendly than ever before. Seamlessly move between various decentralized applications, all while making sure that your data stays with you. You can access your cryptocurrencies and sign into various decentralized applications without installing any additional extensions. Opera's built-in crypto wallet supports Ethereum, ERC20, and ERC721 tokens, allowing you to send crypto and NFTs directly to other people. You can also add in your MetaMask, Coinbase, or Binance wallet to the browser as well via Opera Chrome extension. Seamlessly integrate the Opera browser with top decentralized applications, DeFi tools, and GameFi games. Privacy and safety is always top priority, and the browser was built and designed from the ground up to allow you to own your own crypto and navigate the challenges of Web3. If you're interested to learn more, check out the link down below in the description and get started with the Opera crypto browser today. Alrighty, everyone, so let's go ahead and kick things off here by diving into the analysis. As you all know, we've generally got one single range of price that we're focusing on here today in the near term, and that's $47,500, give or take, within a few $100 either direction. This has generally been a range of contestment of price that we've had over the past few days, and there's a reason that this is serving as resistance. All the while in the past, this hasn't been a critical range for price here, at least in the past couple of months of the past year. It is a significant range in the sense of how price has been acting over the past few months in 2022. And that has to do with the fact that we've been establishing roughly higher lows and higher highs. And we can see that here through the higher lows here, the wicks on each candle, and along with it as well, the higher levels here within the points of resistance. This is generally an ascending channel. It's a bullish pattern. It's price moving up over time with those higher lows and higher highs, which is indicative of an uptrend. But I don't want to just focus on here and now, because all the while this is serving as resistance right now, at least we haven't seen price claim back above it, which is what we do need to see. I want to take a look back at history and talk about the telltale signs of what we would like to see in order to have the sustained rally to set in those new all-time highs. And we see this pattern repeated many times throughout history. But I think here it's most important as this was the most recent previous correction from the one that we went through here. Okay, so let's go ahead and dive straight into it here. Now, as you all can see from back here in May, during really the peak fear of the May correction in 2021, all the way here towards the rebound at the end of the consolidation period here in July and early August, price generally was chopping sideways and had a lower downward trend. And that only got reversed here towards the end. But the key point that I want to focus on is the upward band of that consolidation channel where things were zigzagging sideways. And that's generally right here around 40 to 41K. This was the general resistance range that price kept hitting each and every time. And even when we had a slight attempt here, we broke below. And then finally, after that final retest, we got above there. But what I do want to emphasize that I think is so important here is looking for ranges where price is building support amongst previous highs. And really, for the consolidation range, these two price points here were the significant price points we needed to watch. They had slightly higher highs over time, And we needed to make sure that we not only were able to clear through that so that this apparent potential line of resistance, right, would no longer be treated as resistance. We can see that here in regards to price. But when we got back above there, we needed to do one thing, and it's something that a lot of people really don't spot sometimes, and that is make that range into support. Now, this isn't always the case, but it is more likely than not going to be the case for a sustained rally. And why is that? The reason why is because if we solidify previous resistance, a range in price where market holders of Bitcoin were usually unloading their crypto and were able to get above that price, and then when price comes down, buyers are buying at that range. Psychologically, this is not a range where people are looking to sell now, or at least where the sellers are leading. It is vice versa, or that's not a proper use of vice versa. In the opposite scenario, what we have here is that the buyers are outweighing the sellers, right? Because there's always people buying and selling in the market at any given time. There's people getting in and out of the market. And the thing is that when you start to see price holding at that range due to limit orders and market order flow on the buy side, it is sustaining price above that range and driving prices higher. It's just how asset markets work. And again, as you guys know here on the channel, we've emphasized that point of market order flow and limit orders starting to outweigh, in this case, the bids, in this case, the buyers, outweighing the asks on the order book and the sell side pressure on market order flow. And you can see time and time again here, we retested this range here. People would say, oh, it's not very significant, when in reality, this was a range that was tested multiple times. It's where buyers mainly came in during these times. Now, we did see a fall through here, but again, watching for that general range of potential resistance, again, around this 42K range that's ascending, this is where buyers came in. They came in at the big even level here around $40,000. They sustained it, we got back above the line and continued trending higher. So you're gonna probably have, and this is the big point I want to emphasize over here during where we're going right now, all the while I would love for price to just go vertical tomorrow, we're probably going to see price starting to continue to retest this range, break above there, start to have some consolidation. It might be even a little bit more volatile. We might even break to 50K and face resistance there. But the key point I want to focus on here is how price is going to probably chop sideways for a lot of April before we can start to see a trend higher. Now, this is, again, just a very rough drawing, and don't take it as gospel, but the key point here I want to talk about is, again, the importance and significance and the benefit of turning resistance into support. It solidifies, it sends a message that the trend is no longer one to be skeptical of or conflicted about, that the bulls are in charge. They have turned any points of setbacks into new support and they're ready to leap higher in price. That's, again, just the principle here of generally doing naked trading. All right, don't worry, I'm not going to get naked, guys, and nor do you have to be naked. But if you'd like to be naked when you do naked trading, that's totally fine too. But naked trading is around this idea of focusing on support and resistance, really thinking about what is price telling us here, and what's the market in general telling us through price. And again, we've had a lot of these models that we've talked about. I don't want to focus too much on the data science models today, but we talked a lot about the supply contraction in the market, as we can see through the HODL waves, the lack of Bitcoin being moved on chain in the past year or more. We can also see the fear and greed index starting to highlight into yellow territory like we did back here during the previous correction, and on top of that as well during kind of the multitude of red and orange days we saw back during the March 2020 correction or back here in the bear market, right? So there's a lot of telltale signs in the data science models that Bitcoin is cheap now and it's ready to start moving higher. But what I want to focus on again, and I want to reiterate, is this focus on market order flow and the limit orders. To be completely candid with you all, at least here in the last 2 or 3 days, as price has started to trend higher, and we've been in this general kind of chop here, right? If we take a look at the 4-hour chart, right? We've been just pressing sideways since the leap up here on March 27th. The market order flow here, or the cumulative volume delta, is not looking entirely favorable yet. Right? If we take a look here at the order book as well, in the near term, there's a decent amount more asks on the order book that is holding back price. And to make matters worse, what effectively is happening right now is that you've got more market order flow selling at this range, but along with that as well, you've got more limit orders on the asks, meaning that we need to clear through this. Now, of course, people can remove their orders. People always mention that as well for limit order support on the bids to support price. That's very true, but I'm not going to ignore the fact that the vast majority of those are likely going to get filled at some price range around there. There's a reason they're placed in there. People want to get their orders filled. They want to be able to make their margin on their trade or get in at the right price rather than overpaying and facing slippage. Again, to be honest with you all, I'm going to say it both ways, when it's bullish and when it's bearish. Here on Bookmap, we get a lot of great insights into where the order book stands. And right now, the bears are in the lead here, at least when we're taking a look here at the Coinbase order book for Bitcoin, and as well on the market order flow to the cumulative volume delta. We're going to need to see more buy-side pressure here in order for us to sustain higher. And on top of that, we need to clear through these limit orders. Who knows? You could get something out of nowhere, but I think we are going to see a sustained trend here. And it usually tends to be that you're going to see continued patterns of higher lows, a nice solid trend upwards before you really get that big breakout where a buyer just comes in, because they're watching these kind of metrics. So if you guys are interested in getting these extra additional market insights that you just simply can't get through a lot of platforms like TradingView that we use here on the channel, I recommend you guys check out Bookmap. I've got a link down below in the description where you guys can get access to the platform. There's a variety of different plans depending on what you want to use it for, but I highly recommend the platform. Love using it here to get these kind of intuitive insights, see the heat map of the resistance over time caused by the asks, as well as the potential support as well through the bids on the order book. Lots of really juicy and valuable insights here that we can utilize for our trading strategy. And then again, just to talk about the potential bad case scenario here, again, all the while, I'm not going to go and say, bear market inbound, of course, and that's what I would hope you guys wouldn't be going for either. Be a bit more kind of rational in this case and thinking that, hey, whether we're bullish or bearish, there's a chance that there could be a correction here, because if we're not able to clear through those asks on the order book and take dominance of market order flow, price will start to trend lower here in the short term. Now, this is the 4-hour chart, so no need to panic. It's not the end of the world, but it might be that we are probably ready for a little bit of a pullback here, maybe to make one of these ranges, like 45K, new support, or here around 44,000, where price generally consolidated multiple times. That could very well happen. Again, looking for ranges of previous resistance, and when price clears through them, looking for them to become new support. I always see that as a generally good thing. And that's the thing that you want to keep in mind. All the while, maybe you think, price is going to move back in the short term. Always ask yourself whether or not there are price ranges that could act as support. And this is, again, why I understand a lot of people were concerned that if we were back here in the day, if things didn't go the way that we've been talking about, if they actually rolled over in price and started to clear through kind of this range where price has been bought multiple times in the past, you're really entering into no man's land, right? And that's a very important point here to keep in mind. If price were to just do, and I'm not saying it would do this, but I'm just trying to explain how a naked trader would view this. If price rolled over here, right, cleared through that range, and especially if it treated that range of previous support as resistance, you'd be looking at a terrifying collapse for Bitcoin. But I don't think that that's going to happen. I think that is a 1% case scenario. I think the vast majority of price action that we've been able to look at, the data science, the market order flow in the longer term time frames, the bid activity versus the asks on the order book, has all favored the narrative here. And we can see it manifesting most importantly through price. It's looking a lot like we saw back here. And that's why we've been sticking to our guns here, that we're in an expanding cycle here. We're in a bull market still. We've had some pretty hefty mid-cycle corrections due to excess credit and leverage in the system. But the train's still moving. The game is still going. There's no reason to doubt that. But all the while, it is important to understand the focus of today's video was to focus on understanding and being able to stomach those short-term ranges of resistance and price, but not losing sight of the broader trend of higher lows and higher highs. The longer your time preference is, and the more you can stomach those short-term moves, you'll be better off for it. I can guarantee it, guys. I learned that the hard way in crypto, in equities, in Forex, and commodities. I can't express it enough, guys. But I want to keep this video relatively short today. I ramble on as always. If you guys enjoyed my rambling, consider dropping a like, consider subscribing, and leaving a comment if you agree or disagree. Again, this is a little bit out of our normal kind of cadence. We focused a little bit on the short term here, but I think it's an important thing in the sense of being a lesson for naked trading, which is my preferred style of trading. And on top of that as well, it's very good to understand these principles of how price can give us so much understanding of where the market's heading. Anyways, everyone, that's it for today's video. Thank you all so much for watching. I'll see you all in the next one. Stay safe, trade smart, and have a wonderful rest of your day.